Australia's subprime mortgage scheme is in full swing. And is Australia's property market at risk of the property bubble bursting and Australia's economy experiencing a collapse in the next 1 to 3 years? I think it's important that we unpack in this video what's happening in terms of the 5% deposits and how many people can actually access this scheme, what it means for everyday Australians looking to invest in the property market in the future, and how you can make the best decisions with this information moving forward. Now, the government introduced at the 1st of October the 5% deposit scheme for first home buyers. This is a demand driven side of the property equation, not focusing on the supply side. We also have a massive amount of overseas migration of immigrants moving into the Australian market every year. Something like 50,000 immigrants per month are finding residency status in Australia and moving here permanently. That means around 500 to 600,000 people a year are moving into Australia. Now, being a nation of about 27 to 28 million people at this point in time, that means we're seeing monumental change in Australia's major capital cities. The Melbournes, the Sydneys, and the Brisbanes in particular are having the most amount of drivers of migration. Melbourne and Sydney tend to be the hotspots for overseas migrants to move into first, initially, and then Brisbane is seeing the lion's share of interstate migration where people come up to the Sunshine State once they get themselves settled in Australia. Now, because we're seeing so many 5% deposit buyers out there, the investor market has also heated up in the same price point. In Melbourne, this is up to the $950,000 price point. In Brisbane, it's up to the $1 million price point. And in Sydney, this is up to the $1.5 million price point. The reality is these are government-backed subprime mortgages. And the reason they're generally considered subprime is because they lack the available equity and they're leveraging people up to the hilt on 30-year mortgages with a very small deposit. Now, what this means is if we have a market correction of, say, 10%, this would put all of these first-home buyers in negative equity, meaning that if you bought a house for $800,000 and you put down a $40,000 deposit, and that $800,000 home dropped to $720,000, the first-home buyer would not only have lost their equity of $40,000, they would have lost another $40,000 by that 10% drop. What this means is we essentially are having a government-backed property Ponzi scheme here in Australia. I said it, I'm a buyer's agent, I'm a property investor, and I believe we're in a giant debt bubble and living in a major Ponzi scheme in terms of the Australian property market. Australia is not a market like the USA or even the UK with a lot more business innovation and share investing being a commonplace, where people are on the NASDAQ and stocks are regularly listing and there's lots of innovation and movement in the stock market. Australia is a resource-based country where the key scarce resource at the moment is land and location. Where are people willing to pay more money to live? Look at the Gold Coast, for example. We buy in that market as buyer's agents. Locations like Mermaid Beach, Coolangatta, Kirra, all of these beachfront locations are where the property is very scarce. And you see sales up to $10, $15 million when you're getting waterfront opportunities. And even in the more family type suburbs, there's $1, $2, $3 million assets going on the canals in the Gold Coast. The same applies to Brisbane. Look at New Farm, Tenerife, Greenslopes, where I'm based myself. These inner city locations with owner-occupied drivers push up prices to where people would say it's ridiculous, it's unaffordable. But the reality is people will pay the prices if they can get the money together as high-income earners or business owners or receive it as an inheritance and continue paying more to get the family home in the location they want to be in. Now, the really interesting thing here is what is going to happen moving forward with this subprime mortgage outcome. What we're seeing is that these first-time buyers are taking on higher leverage and higher debt. They're going to have reduced equity buffers, and it's really a risk to the borrower, even though they've got lenders' mortgage insurance behind them, backed by the government. Now, this does have an echo of what happened in the USA in terms of their subprime mortgage crisis, but the difference, I think, is this is government-backed. And so, although I use the heading and the title for this video and the thumbnail, it is a subprime mortgage issue, I actually don't think that we're going to experience that 10% example drop because it is government backed. And the government doesn't want this scheme to fail. They don't want first home buyers to get into the market with their 5% deposit and end up in a negative equity position. What this means is the government is going to continue to fuel the property market as well as inflation fueling the market naturally in terms of the way the economy works. And this is only going to further impact the housing market. So what does this mean as an investor or an owner-occupier moving forward? I think we've seen increased demand, and we've noticed that as boots on the ground buyers agents in Southeast Queensland. If you've seen some of my recent videos, you'll know that myself and the team are expanding completely into the Melbourne market from the 1st of January 2026. And so we're going to be covering as far down as Geelong, all along the East Coast and all of central Melbourne, as well as a boots on the ground style buyers agent. So Purpose Property will be covering both Southeast Queensland and the Melbourne market. Now, I'm actively buying in Melbourne at the moment myself, and I'm seeing opportunities there as well. As I just bought another deal in Southeast Queensland. So there's a lot going on in terms of the heat of the market. What this means is we're seeing inflationary pressure, affordability pressure, demand drivers backed by the government. And so these affordable price points are growing at the fastest rate. It's the houses between the $600 to $1 million price point, in my opinion, are the areas to buy at this point in time. A sweet spot, for example, would be around that $850,000 to $900,000 budget, where you can buy really good quality areas. Yes, you might have a slightly lower yield percentage, but if you can get levers on that deal where you can do a cosmetic renovation or have a bigger block to do a secondary dwelling at a later date, those are the types of deals that I would be spending my money on. And I'm actually spending my money on those types of deals exactly as we speak at this moment. And so you can complain. We can complain. We can say that this property market is broken and unfair, and I would wholeheartedly agree. I don't think it's great that property prices have jumped 50, 100, even as much as $150,000 in a 6 to 8 month period in 2025. I feel for people who can't break into the market. But the reality is Australia is a far less diverse economy and a far more emerging market than some of the major countries across the world. When we look at the USA and the UK and other major cities in Europe, you'll see that those major cities like London, for example, and New York in the US are far similar to the Sydney market, where people just can't buy along the Bayside in Sydney. It's just far too expensive for the everyday person. The same is going to start happening more in Melbourne and more in Brisbane as we move towards 2030 and eventually 2035. And so for my money, I want to buy those locations where I'm going to see that affordability, but price pressure in the future as far as taking an investment mindset. As an owner-occupier, I want to lock in the family home and then try and debt recycle that property to go out and build my asset base further from there. It's not a fair market out there, and I believe it's only going to get worse in terms of the property moving away from the everyday person in our major capital cities. Now, the reality is if the government does do an incentive on the supply side of the equation in the future, which they've been talking about, 1.2 million homes over 5 years, even though that's not even close. And I'm trying to develop at the moment and add properties on some of my deals. And it's very difficult and expensive with council to actually create new housing supply. So unless they add a lot more supply surrounding Melbourne as a city and surrounding Brisbane out towards Ipswich and the western side of Brisbane and Southeast Queensland, unless there's loads of supply added, then we're going to continue to see price pressure. And even if all this supply does come through, people will still want to be in those scarce locations, close to the schools, close to the family, close to the city for work, or the Bayside for lifestyle, or the beach for lifestyle. And so that's where I buy, and myself and the team at Purpose Property focus on the established market, look at where we see value in this current market, and don't get stuck up on price memory. Given that some deals have had $100,000 growth this year, I'm seeing it with clients and potential clients that people are getting nervous and saying, oh, I don't want to buy because it's had too much growth. Now, the reality is you need to assess the future in terms of prices. Looking at what the government's doing, look at the investor and affordability demand from first home buyers, and make a decision for the next 5, 7 to 10 years, not a decision for the next 3, 6, 12 months. And that's going to put you at a lot more ease when you make your next property purchase decision. So I'd love to hear your thoughts in the comments below. What do you think about this government-backed subprime mortgage crisis? And where do you think property prices are heading? Up and up? Are we going to continue to see inflation and the government mingle in the property market? Let me know in the comments down below what your thoughts are. And head over to purposeproperty.com.au to book in a free chat with myself to talk about buying in the Brisbane or Melbourne market in the near future. And if you want to see more videos on real estate renovating and financial freedom, click this video right over here. YouTube reckons that's the one you should watch next. I'll see you in that video. Peace.